Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today is a full-time civil engineer whose portfolio consists of 2,100 units in multiple states, as well as 4 single-family homes. He is also the host of the Simple Passive Cashflow podcast. Lane Kawaoka is co-founder of MFPE Investments. Lane, welcome to Purchase to Profits. It's great to have you on the show.
Hey, thanks for having me, Seth.
Yeah, you're very welcome. I'm really looking forward to this. So to kick things off, do you want to tell us about your real estate goals right now?
Yeah, right now I'm just trying to get up to that $10,000 a month passive income level, right? Still working the day job as an engineer, but just I think the last few years it's really skyrocketed my unit count. But just still trying to chip away, just focusing more on deals that cash flow as opposed to development based deals that are more based on performance.
Yeah. So what does when you hit that $10,000 a month goal, what does that look like? Like, do you have it broken down to I need this many units, so I need this amount of dollar volume?
Not really. I mean, I think when I first started, I was kind of like, $200 a unit and then just keep them picking them up. But now it's sort of becoming more of a game of diversification as I go into more passive deals, into syndications and private placements. Sort of it's harder to kind of correlate to X amount of units, right?
Yeah.
I think each deal I go into, I just think of trying to break down how much is mine of the big share, and that's the way of getting unit counts. But at the end of the day, it's just what's really coming in the bank account on a monthly or even more so quarterly basis, because it's harder to project how much you're getting too.
Yeah. Yeah. So do you want to explain, just because, like you mentioned at the start, you were looking at $200 a unit. How has your investing strategy and maybe your mindset changed from when you first started all the way to now where you are?
Yeah, I mean, in the beginning, I was just picking up a lot of, I had a couple rentals in Seattle, right? And that didn't follow that 1% rent to value ratio. I didn't really know about that. There were A-class rentals. And then I kind of switched over to one of those turnkey rentals because, when I was living in Seattle, I wasn't able to get cash flow. So, switched over to more of the cash flow based investments and, picking these turnkey rentals up and really having a lot of success doing that. But that just really wasn't scalable after a certain point, after I had about 11 of those. So that's when I kind of started to do, get into these bigger deals where I can diversify over different geographic markets, different operators, and different business plans too.
Yeah. So you had picked up about 11 units and then you figured out you couldn't really scale. What set you off, or what pointed you in that direction of getting into the bigger deals? Like, were you talking with somebody, or were you just reading some books?
Yeah, I mean, all of the above, right? Like, because you start to go to these conferences for me, and then it was they basically were just trying to sell us turnkey rentals.
Yeah.
And everybody's drinking the Kool-Aid of, ooh, I'm going to get 10 single family homes or 10 Fannie Freddie Mac loans in my name and 10 in my spouse's name. And then if you do the math, $200-300 per unit of those, that's $6,000 passive a month. But really what happens, I mean, when I had 11 rentals, I had like an eviction or 2 a year and a big catastrophe that happened every quarter. And it just wasn't, that was fine, right? I mean, that's pretty easy to run, especially when you have property management. But like that was only 3,000 at most a month of passive cash flow. I needed to four times that, or even 3 times that, like 30 houses, and that would have been just like an eviction every quarter and big catastrophe couple times a month. It just wasn't scalable, right? So I started to go around different circles, started to join different masterminds and conferences, and they were all doing much higher level stuff. And the rentals and single family homes and all these burrs were kind of the thing of the past for them. And I just kind of said, well, I'm just going to follow what these other, higher paid professionals are. I'm going to find an older engineer and see what they do, because that's pretty much the pedigree that I'm going to follow.
Yeah. Well, with an eviction, like every quarter, you could have your own TV show.
Yeah, I mean, that's I actually got like interviewed to be on one of those shows, and I told
Oh
them like
yeah.
what I do, right? And then they're like, and that's kind of boring, right? Like you just buy and hold. Yeah, like yeah, it is pretty boring, even if you were to have an eviction every month or every quarter.
Yeah. So if you had to go back in time, would you tell yourself not to get involved in those turnkey single family homes and just go into the bigger deals right away?
Um, no, I wouldn't. And I think this is where a lot of people make a lot of mistakes when they're especially first getting up. There's a progression here. I call it Simple Passive Cashflow 1.0 is to get yourself unbroke and at least cash flowing like, a couple grand a month. And that might mean a couple units, that might mean a dozen units, whatever
Mhm.
it takes to get you above that threshold. And partly this is you got to take into account how much net worth and how much liquidity you're able to create in a year. So like for example, a doctor making 300-400 grand a year, they really shouldn't screw around too much with single family homes. It's just not worth their time. But me personally, I was just an engineer making just under 100 grand starting pay. I was able to save a lot of money because I was a cheapskate back then. But just starting my net worth out from zero, the single family homes are the quickest way to do it, and they have a good resale value to that, and that will really help you vault yourself into the bigger passive deals.
Mhm.
As they don't invest for cap appreciation, it really helps you when you sell those things in a matter of like 4 to 7 years.
Yeah. And so right now, on your goal to get to that $10,000 a month, how far along are you? Would you say you're halfway, like three quarters?
Yeah, I mean, the last I checked, like about a year ago, I was probably about halfway there. But sort of as I kind of transition, I'm really hurting on my cash flow from what I'm used to, right? Because I
Yeah.
start to sell the properties and I put them into passive deals, which usually take about 6 months to kind of kick in.
Hmm.
So right now I'm somewhere halfway there, but I think
Yeah.
this is the stage where things really start to accelerate in the other direction. Um, I did this exercise. I'm sure everybody does it a lot, where you get a spreadsheet and you kind of map out how many units you're going to get based on how much you're going to save and put down on deals. And I thought it was like somewhere between like 3 to 5 years I'd be at that amount. And that was kind of the reason why I went to be more of a passive investor. I was kind of like, well, I'm going to be at my goals well before I'm 40 years old. So like, should just chill out a little bit and just take the easy way.
Yeah. Well, do you want to explain the difference between an active and a passive investor? Maybe somebody's watching right now and they don't understand the differences.
Yeah, I mean, I think when we first start out, we're all active investors, right? Even if we have a property manager involved, we directly own the building. We're pretty much doing all this like really lame stuff, like calling insurance brokers, making sure you still have insurance, calling your property manager, emailing them, keeping them accountable, finding an HVAC person if your property manager's has a buddy and just gouging you on the prices, that kind of
Yeah.
stuff.
Yeah.
um, as I said, it's not scalable to keep doing it. At some point, this analogy where, you know, everybody gets off the bus or the train at some point, right? You have to have goals. And if you don't have a goal, you're just kind of a weirdo who stays to the end of the line.
Yeah.
Only the weirdos just keep going and going and going. You need to have a goal. And, for me, it's like $10,000 sounds about right. I mean, that's what a lot of people do. So that's at some point you need to figure out, you ask yourself this two-part question. First, do you enjoy doing this sort of active role in real estate? For me, I didn't really enjoy it. I mean, I manage contractors and construction projects at work. Probably don't really like my work too much, and
Yeah.
I may be good at it, but I don't like it, right? And the second question of that two-part test is, are you good at it? And that's sort of that's a loaded question, right? Because you don't know if you're good at it. You don't. Your ego does give you bad judgment.
Yeah.
So usually it's like, look, at some point you should be more of a passive investor, especially if you're doing this real estate investing right. You should be able to build your net worth very quickly and then kind of put it in motion. And be on your way to financial freedom. Because at the end of the day, you just wanted that freedom. There's
Yeah.
no, a lot of the, being an operator is just trading your time for dollars. I mean, I look at these like bigger deals and I'm like looking at the sponsor comp or the operator compensation. It's just like, it's like 30, 40 grand a year. And it's like, geez, that's like I can just go to my day job and just rock there on the chair.
Yeah. Yeah, for sure. So do you, like you mentioned goals being really important. Do you have any routines maybe that you follow, maybe, daily, weekly, monthly, that really keeps you focused on that acquisition and keep building up your cash flow?
Well, I'll be honest. I mean, this is not very practical for most people. I've kind of built up a network where people operators go out and send me deals. So I just sit here on my computer and wait for it to come on my email in a way.
Yeah.
But to get there, you got to go to a lot of conferences, right? You got to meet a lot of people. You got to kiss a lot of frogs. You got to meet people to know which people are you want to stay away from out there.
Yeah.
And I mean, that was the routine going, and that was how I kind of started. It's not about meeting operators or other investors. It's about meeting other passives, in my
Mhm.
opinion, which is a lot harder, right? Because if you're a passive, you don't go up to things.
Yeah. So do you want to maybe give some tips? Just because we have people watching this show where, they're interested in getting involved in real estate, but they don't want to, they don't want to operate it. So they're looking on the passive side. How would you suggest they start out starting to vet some, general partners? How would they get started?
Yeah, I mean, when I look at deals, right? Like I'm a passive investor, and my role is I call myself a hunter. I hunt the deal hunters.
Yeah.
So that's essentially what you're the person you're describing, right? And here's what I do: I go around and go to different conferences. I try and get away from like the Facebooks and the social medias, because those are just the people good at social internet marketing.
Yeah.
Because I want to find that operator who's maybe a little socially awkward or just can't market themselves, right? Because those are the best operators, in my opinion. I
Mm-hmm.
mean, I know those are the best engineers, right? The guy
Yeah.
in the corner who's just knocking stuff high quality work out.
Yeah.
So it's a two-part thing. It's a good operator is going to be a good operator, but then also you have to vet the numbers. So you've got to learn how to underwrite the numbers yourself. So get the P&Ls, get the rent rolls, run your own comps. May even have to go walk the properties, go verify those comps that they're using, and
Mm-hmm.
then run it yourself, because that's going to self-check the fact that hey, you got this guy off a referral, and you can't really go off of referrals too, right? I mean, a lot of people, they just say that, oh, so and so's good. Well, have they even invested in their deal, right? So the higher your level of network gets, the higher like the referral quality gets.
Yeah. And I think you make a really good point where, even though you're on the passive side of the investment, you're still doing your own due diligence. Like you're checking the numbers yourself, you're looking at the property. You can't just kind of ride on somebody's coattails and expect them to make sure everything's good.
Right. It's more of a like a bet up front. You're making an educated bet up front, and you're just kind of letting it go. You just got to let it
Yeah.
go.
Yeah.
But I'll say 90% of my investors, they don't already know what they're doing in terms of the numbers. I mean, how do I know this? They don't ask for the P&Ls and rent rolls.
Yeah.
So I don't know what the heck they're looking at.
But maybe the pictures just look good.
I guess so. I mean, me personally, if it's a nice shiny PDF, I'm very skeptic.
Yeah. Yeah. No, for sure. So is there one deal that stands out of all the ones you've done so far as a Keystone deal?
I mean, I say Keystone deal is like it's the single family homes that really get things started. I mean,
Yeah.
who cares if it's 100, 400 units? It's a single family home where you're underwriting, is this thing going to really bring in the rents? And you're calling the property managers on the ground, even using some black or gray hat tactics, like calling up grocery stores or the local church, or I used to call the local Holiday Inn to verify the area was good or not.
Yeah.
The first one, and if I were to pick one, it was the first time I went out of state. Like I said, I picked up a few units in Seattle, but then things weren't cash flowing, and I I was kind of stuck. So I
Hmm.
went out to Birmingham. I didn't go out to Birmingham and physically go. Let's get that straight. But to get this $80,000 property that supposedly rents for 850, and to kind of go through the due diligence on that, that was for me the keystone. I mean, that's where it all started.
Yeah. So let's talk about that. So it was your first time going out of state. How did you connect yourself with the people who would be operating that property for you?
Yeah, so you get a broker or the turnkey provider to find the property for you, right? And they're selling it
Yeah.
to you, but you really don't want to listen to anything they say, right? If they're telling you it's a B class property, it's probably a C. Just downgrade it by one.
Yeah.
Um,
Yeah.
but you want to pick up your key people, which is, of course, those are the brokers, right? Those are the salesmen. But you want to get your property managers. And I always say to work with other third-party property managers, people who aren't associated with the people selling it. Yeah, they might be buddies kind of behind the scenes, but you want that person out there to tell you, hey, the property you bought from these guys a few months ago, it wasn't very good. Or you want them to at least have a relationship with them to verify that property before you even buy it. Right.
Yeah.
So that's what I tell a lot of my coaching students, like build up a list of property managers and don't just go through that stupid list you guys always, how long have you been in business? How many units do you have? Can you tell me in this situation what you do? Like, no, that's really dumb. Don't burn the relationship on that. Say, hello, my name is so and so. I'm an out of state buyer. I just wanted to say hello, and maybe in the future I can send you a few properties that I'm under contract under that I'm looking to buy, and we can have a quick chat on the location, right?
Yeah.
Now I'm gonna send you a list of 25 properties. You tell me which ones are the bad ones and the good ones. Like, no, it doesn't work like that. But
Yeah.
like building relationships slowly and then finally giving them business gives you a big leg up, especially if that turnkey provider goes away or that the rehabber goes away, which they do, because the whole fix and flip business is a bunch of really a lot of fly by night companies, in my opinion, that single family home world.
Yeah. So, have you had any experiences where you did get caught, maybe with somebody who didn't perform like they were supposed to? And if so, how did you avoid that the next time around?
Yeah, I mean, I was always lucky in terms of like I always had a network of people investing in my area. Like for example, there were like a few investors in Birmingham that we'd kind of always, we wouldn't have a scheduled call every quarter or anything like that, but like we'd get on Facebook Messenger and say, hey, how's it going, man? Are you still using XX property management company? And they'll say, oh no, no man, we got annoyed by them. They were charging us $900 to like fix a toilet leak, so we moved to these other place,
Yeah.
right? And then you kind of say to give other people a heads up, that might be happening too, and that's how I kind of went about in each of my markets. Obviously, it's not scalable, right? You can't
Yeah.
have like 9 buddies in these 3 areas to kind of bounce out ideas because it's just something's gonna fall through the cracks, right? And you can work with a bad person, but that helps mitigate a lot of it. At least you're not working by yourself in the dark.
Yeah, for sure. So you're at the point where you're about halfway to your goal. How have you been able to profit from how has investing in real estate changed your life so far?
I think, first of all, like I used to work for like a private company, like when I first like 5, 6 years as being an engineer, and I had some really old bosses, and that really got a bad taste in my mouth for corporate America and just working for the man. But sort of by that year 6, 7, 8, I was definitely on my way. I was at that double digit unit count, and my passive income was just it wasn't replacing my income by any means, but like it was definitely on the way there, right? So I definitely adopted this mindset of like, this job is not going to be forever. It is just a means to get me to where I want to be. And so I started to go from more private sector jobs, much higher paying, to much lower paying private sector. And that's kind of actually kind of rejuvenated my career. I actually kind of like going in, I like the people more. I like the people I work with. I don't necessarily like the job. And who really likes their job, I guess. I don't know. I
Yeah.
guess there's people out there that like that, but me personally, I'm an engineer, so I just project manage and push papers all day long. I can't really get thrilled of it, but like I do enjoy going, right? Like it's a routine and it's kind of calming to be there. And if I would stay at home all day, I just eat junk food all day long.
Mhm.
But it's more a peace of mind. It's a lot less stressful for me. I mean,
Yeah.
sometimes I'll go to work and I'll barely do much of anything, and I'm like, things will be fine. I mean, I have a pretty dang good life, I think.
Yeah.
I live in Hawaii. I mean, what else could be better,
That's right. So, do you have like how many more years do you think you'll keep your job before you finally pack it in?
I don't have kids, so I think that's a big thing. Um, I'm sure one day I will, and then I'll just stay at home and just bug the hell out of them. But like for now, this is kind of, I get a little social interaction. Not the most extra. I'm kind of an introvert, but I do like, going, like I said, the routine. Um, but easy money, right? I mean, I got a few grand coming in every couple weeks for almost doing nothing. I mean, this is really why my parents sent me to college, right?
Yeah.
To get this, get this stability in my life, and I worked so hard to get here, and I'm not just gonna throw it away, right?
For sure, for sure. So, Lane, if somebody's interested in, finding out more about what you do, or you mentioned your coaching, where can they find you?
Yeah, I mean, you can, just like, you give back, Seth. It's just like I got my podcast, and I've been doing that for a few years now, and it's sort of at what is it, the iTunes and Google Play and all these other things. So you should just Google Simple Passive Cashflow, or just check out the website simplepassivecashflow.com. You can check it out there.
Yeah.
And my email is lane@simplepassivecashflow.com if you guys want to reach out and connect.
Perfect. I'll make sure we put the links right down below so people can just click and find their way there. So, Lane, just want to say thanks so much for taking the time to share your real estate success with us today.
Yeah. Thanks for having me, Seth.
Yeah, you're very welcome. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.